Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim. Hope you had a good New Year.
Oh, it was great. Stayed inside, didn't get involved with any of that drunken nonsense when my wife was happy that she could drink at home and didn't have to worry about getting me home safely.
Yeah, you know when you're over 30 or so and the mentality starts to shift that direction.
Oh, well over 30. Let's double that number in a bit. Eric, equity markets in the U.S. down. Is this just one of those little dips, or again, so many people are nervous about what direction the U.S. markets might take in the new year?
Yeah, I don't know if today's particular downdraft is the start of anything larger, but one of the things that I've been watching, I've described how I thought that 2017 was going to be a major transition year in a lot of the financial markets and commodity markets, and that was tied to a much broader expectation I had that's linked to this 40-year cycle. But with that said, 2018 to 2021 is when I think you'll start to see some new trends develop, some previous movements kind of coming to fruition, movements and trends. And in order to hone that down a bit, I look at some pretty specific monthly and weekly cycles, and then a lot of filtering indicators and signals that are really the ultimate filter for my work. But with that said, two of the most consistent monthly cycles over the last 3-4 years, and they're actually intimately related, are a 5-month cycle and a 10-month cycle in the equity markets. And as I've kind of explained before, I have this cycle progression tool that gives me some clarification on cycles, and really simply put, it's when you have a certain number of low-to-low cycles, and as long as the most recent two are ascending lows, and then there's some other wave and price indicators that also help filter that for me, you expect the next cycle to invert and become a high. And so that entire cycle between the low and the high is a wave up instead of a wave up and then back down, which would be a normal cycle. With that said, there's been a 5-month cycle that has timed at almost every significant low since late 2014, and an overarching 10-month cycle that has timed even the more significant lows, and that's the one I'm really focusing on. It timed the low in October of 2014. We had kind of a sharp correction from September, October, and that was kind of a warning signal for what was expected in 2015 and early 2016. But then 10 months later, in August of 2015, you saw a very significant bottom. That was after the Chinese markets had crashed about 40% in a matter of 2 months and drug most of the other global indices down with it. And then 10 months after that August 2015 low, you saw a pretty significant intervening low in late June 2016. And that was on the heels of the reaction to the Brexit vote, that leading into it, everyone was starting to discount that possibility. Then all of a sudden, you got Brexit, the markets had a quick, sharp sell-off, and they created kind of a textbook spike low, and so that perpetuated that 10-month cycle. So then you had lows in October 2014, August 2015, June 2016, and that had me anticipating a significant low in April of 2017. That materialized after a brief pullback or a moderate correction in March and April. And from there, what that shows, that you got them as ascending lows. It was 4 consecutive lows, and that projects a rally into the next phase of that cycle, which is February of 2018. And so you're coming into that. The markets have been surging since November, and so I'm starting to look for signs of other shorter-term, more near-term cycles starting to indicate something similar, starting to hone that expectation. There were some indices that even projected that it's an approximate 10-month cycle, but it could come in anytime from mid-January to mid-February. So that's one of the overriding things that I'm looking for, and there are some specific wave projections and targets that several of the key indexes are getting very close to. So they're in the process of fulfilling a lot of upside, but by no means have they yet signaled a downturn.
We'll have more with Eric Hadik right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Eric Hadik. Eric, oil has now hit a 4-year high. Is this trend going to continue?
I don't believe so, at least not in the near term. I think we talked about it, and I put out some reports in the middle of last year. And one of the things that was intriguing to me was that even though crude, unleaded gas, heating oil often kind of alternate their cycles, partially due to the crack each year and when that shifts, and obviously demand greater for heating oil in the winter and gas in the summer. But the thing that was really standing out to me in June and July of last year was that diverse wave projections, timing projections in particular waves, and cycles were all focused on January 2018 for a peak. And so when the products, when unleaded gas and heating oil triggered buy signals back in July of last year, and when crude followed that up, and then in early October, they corroborated that with a pullback low that I was discussing in my Inside Track. That just reinforced to me that an overall advance into January 2018 was very likely. I wrote some articles talking about just kind of posing the question, is this indicating that the first part of winter could be a bit of a challenge, which we've now seen throughout a lot of the U.S. We got it in the Midwest, and then the East Coast really got hit with it the last week or two, bitter cold. And so from a fundamental standpoint, those fundamentals are validating what the cycles and technicals were already indicating back in July and August of last year. So I have no reason to doubt that still is a high likelihood for a peak in January. And there were primary wave objectives. Now I'm speaking in price, upside price objectives that I had, where crude should make it up to $62 to $63 a barrel. Heating oil should get up to about 207. There were some other targets spanning up to 215. And we've just hit both of those levels in crude and heating oil. So the fact that you've now got some price and time objectives being fulfilled together, that's one of those things that also raises my awareness. And so I'm just looking for some other indications that we're heading into a peak, and that at that point I would expect it to be something that holds for a couple of months. There's some other factors that I'm looking at, and there's even, interesting enough, it could be a very quick sell-off because crude has a very consistent weekly cycle that's arguing for an intervening low in late January, early February. So if we could see a peak here this week or early next week and then a quick sharp sell-off, depending on how far that sell-off goes, it could be setting up for a new buy signal, but I don't think the highs would be taken out for at least a couple of months.
One of my frequent guests said he wouldn't be surprised if oil fell down into the 30s again. But what's your feeling?
I don't have any strong indications where that's concerned, but depending on the first 2 months of this year, there's certain criteria that need to be met for me to expect this January 18 high. Right now, it could just be an intermediate multi-month high. I look for price action to hone these cycles and to give me specific indications of what to expect moving forward. But depending on some of these criteria either being met or not being met by the end of February, it could be showing that crude is putting in a very significant 6 to 12 month peak. And then at that point, I would start to develop the downside expectations. Like I said, right now, there's not anything that's strongly favoring it dropping all the way back to 30, but that doesn't mean that it can't either. I know that's a very ambiguous answer, but it's just where my work is at this point. It's not showing anything very specific where that's concerned.
We'll have more with Eric Hadik right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Eric Hadik. Eric, the price of gold today up a slight bit. The price of silver down. Is that unusual to have that split?
No, not at all. On day-to-day and even week-to-week basis, you get that very frequently, and some of the time it has to do with what the traders are concerned with or where their focus is. When it's more of a safe haven type of trigger that's prompting the move into metals, gold benefits far more than silver does. And sometimes, depending on how other markets are acting, it could be something that sees gold rallying while silver and even gold stocks may be moving sideways, even down a bit. But when you even take it down to intraday, it could very easily be the case. Could also be something that one of the markets kind of overshot expectations the previous day, so that market is coming back to an equilibrium point, in this case silver, and whereas gold has a little bit of additional strength. But I think it's more important to look at it in the context of the intermediate outlook, an intermediate trend, which still is calling for an overall surge from early December, when a host of monthly and weekly cycles had been anticipating a major low. From there, a rally into February was what I have been expecting, and so far the action has corroborated that. There is my weekly trend indicator is one of the key things that still needs to confirm the next phase of this rally. If we are going to see another 2 to 3 week surge into February, which I'm expecting after a period of consolidation, but in order to confirm that, I need to have this weekly trend indicator turn positive. But everything else that I have continues to show to me that we should see another move up into February, and even gold stocks, the XAU index, they had this initial surge, went right up to 2 to 3 month resistance around 88, and they've gone into some consolidation. I published some pullback targets for my readers where I had them looking to take some profits in recent long positions in early January and up into those levels, but looking to also get back into those longs after a brief pullback. So that in itself also reinforces what I'm looking for on the intermediate basis, the fact that the XAU is giving these trading signals and even indicating where to get back to a full 100% long position. So it's just all working together. The synergy of that is just reinforcing to me that we've got another wave up coming, and I think that's also closely linked to dollar expectations in the first quarter of 2018.
The price of copper well above $3, trading right now at $3.24. Is that any indication of long-term economic health, or is copper just popular because we're starting to build electronic cars?
Well, I think that there still is some validity to that thinking that copper and lumber often lead some of your inflationary moves and your economic recoveries. They're anticipating things to come. Whether that materializes or not, you need to kind of watch the next few months, but copper is often a very good indication of that. The interesting thing to me is that some of these other metals, copper being one of them and palladium being another, is that even though they move completely diverse from one another, have, much different fundamentals impacting them, that those two markets have some major cycles peaking in February of 2018. Even though gold and silver, that's only an intermediate expectation and potential cycle high. With some of these other metals, it's showing that we could see a 6 to 12 month tops in that time frame. So if they can reach the price targets for this latest leg and do it either by or in February, it would start to set up a very convincing pattern and squaring of time and price objectives that would be a pretty important, significant precursor to a potential top. So I think that, that doesn't mean that the economic recovery or additional economic upswing that copper might be indicating. Doesn't mean that that's not going to unfold, but in many cases, the markets, the futures markets, they anticipate the future. So it's what is to come in the months following that surge.
Canada and the U.S. Both reporting unemployment rates pretty close to what they were in the mid-70s, which is very low. Are those rates true, or is that something you look at?
It's not something that I really focus on, and it's not something that I've put enough research on an ongoing basis to see whether they're misleading or not, whether it has to do with, many people just pulling off the rolls, whether it has to do with underemployment that's often argued. So I really could give you a good solid answer on that one.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim. My
guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or for our guests like Eric can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.